Welcome back to Silicon Bytes, and Moscow is having a banking bust up. Yes, the collapse is finally upon us. Before we jump into this episode, thank you to everyone who supports the channel through Patreon and Buy Me a Coffee. Your support is massively appreciated and helps us to keep the content flowing that is intended to fight weaponized Russian propaganda. Let's get into this story because the banking crisis in Russia is certainly a juicy one. The gates of the financial level crossing are coming down, but the Russian banking system is still stuck on the tracks, like the idiot driver that ignores the signals and bells and thinks they can cross in time. The express train of sanctions and consequences is careening down the tracks. Get ready for the troubled Russian banking sector to be turned to scrap by the impact, a pile of fiscal junk, entirely because of Putin's reckless and senseless decisions since 2022. Russia's economy is about to implode, and the silence on its banking system is deafening. Russian banks are teetering, bailouts are rumoured, and the Kremlin is quietly crafting laws to lock down the narrative. Why now? Because the war, sanctions, and mounting debt have created a financial tinderbox, and Ukraine is busy lighting matches all around it. Let's start with the biggest news that Russia's top banks are quietly discussing emergency bailouts. According to Bloomberg, at least three systemically critical lenders have privately discussed seeking a government-funded bailout if non-performing loans persist over the next year. That was reported in Euromaidan Press. Official data show that only 4% of corporate loans and 10.5% of unsecured consumer loans are overdue 90 plus days. That's reported in Binance. But insiders argue that the actual numbers are much, much worse, with cadres of state banks that are red dead under the surface. And of course, the Russian government is colluding to hide the real numbers and ensure the scale of the crisis does not get out. Regime insider Sberbank CEO Herman Gref admitted, prepare for difficult times ahead. Companies increasingly need to restructure their debts. The central bank is urging loan restructuring, not loan defaults, of course, to mask the fragility, downplaying concerns even as internal panic spreads. But the storm clouds of bad loans are gathering. How bad is the rot? Well, bad loans are rising fast. VTB projects 5%, now hiking to 6 to 7% by 2026. That's not far off the 8 to 10% seen in the 2014 to 16 crisis, as pointed out by the Moscow Times. Bloomberg reports corporate delinquency holds steady at 4%, but household default is 10.5%, with consumer loans sliding fast, again reported in the Moscow Times. Meanwhile, default is creeping into key sectors: coal, electronics, property, defense suppliers, which portends a wider systemic shock, according to the Moscow Times. In wartime economies like Russia's, hidden off-budget lending via state banks to the military and security firms is relatively normal, but that does obscure real fiscal liabilities, according to the Financial Times. The Russian economy is a ticking time bomb, and yes, it has been ticking for 3 years with increasing intensity, but now that has reached a deafening pitch. This isn't mere banking drama, it is a national crisis. High interest rates, inflation, and bleeding revenues have turned Russia into a massive financial ticking time bomb. The National Security Journal warns crushing 20% interest rates have stalled growth, leading to a surge in bad loans and pushing the banking sector towards a potential crisis. Further, a report notes there is 20% plus of household debt. Corporate debt nearly doubled from 40 to 75 trillion rubles. The coal sector debt alone may hit 1.5 trillion rubles by the end of 2025, according to the Moscow Times. This is a hybrid crisis covering banking, consumer, and government debt, masked by military spending illusions. The FT summarizes the situation. Putin's war economy is a house of cards, and the illusion is flickering. Sanctions and isolation are strangling the banking sector. Economic collapse isn't happening in a vacuum. Europe has just tightened sanctions on oil and Russian banks, approving a new package that slashes Russia's export revenue and further isolates its financial sector, according to Business Insider. The Times of London notes that Oman and other regional banks are restricting Russian firms, making even intermediaries turn away from financial flows coming from Moscow, according to Euromaidan Press. Ukraine's national bank chief says that comprehensive isolation of Russia's financial system is gaining momentum, again reported in Euromaidan Press. With oil capped, capital outflows blocked, and correspondent banking relationships cut, Russia is effectively locked out from the global system, just as internal debt stress peaks. And now we turn to censorship as a form of economic life support for the Kremlin. Here's another twist. The Kremlin's recent internet laws seem to be linked to this crisis. Why? Because they are preparing the information battlefield for a banking collapse. New legislation would criminalize coverage of economic panic, enforce pre-approval of any consumer withdrawals, and punish unauthorized reporting of the financial crisis as extremism. Financial collapse and repression go hand in hand, all signaling Putin's intention to continue prosecuting his illegal war, no matter the financial impact nor the societal upheaval it triggers. That tracks with Reuters and insider media trends. Bank withdrawals are being legally restricted. Rumors of limits on cash access and mandatory digital tracking by phone providers are already circulating, according to Euromaidan Press and the Moscow Times. This isn't about protecting depositors. It's about controlling the narrative when banks inevitably stutter or fail and trying to contain the systemic crisis in the banking sector. Let's be clear, Russia's financial system is collapsing under its own contradictions. High costs, military spending, collapsing business revenues, dodgy debts, and global financial isolation have created a perfect storm. The Kremlin is implementing a measure to head off panic banking withdrawals. Expect financial chaos to increase this year and for repression to be ratcheted up. It should not be down to Ukraine alone to increase the pressure on Russia's economy, both its wartime economy and civilian. But allies, Western allies, need to pile in too and plug gaps in the sanctions regime to force Russia's financial system to the brink of collapse and then over the edge, because this may be the ultimate way in which Putin can be stopped and his wartime economy halted in its tracks.